Well, thank you so much for having me. Just very brief background. Some of you have probably met, but my name is Nathan Beckert. I run Founder Suite, which is a software platform for raising capital. Been doing this about 5 years. And before that, spent about 12 years as a consultant helping startups raise money. Kind of the unique perspective I guess I bring is I'm old enough to have been through 3 previous recessions and kind of been there in a couple other downturns. And I've got about 2,000 startups on our platform, all raising money. And I talk to a lot of our customers and users. So I'm kind of, have a bird's eye view of what's going on. And I've been just studying this for the past couple of weeks, like obsessively, probably too much. Let's start off with like the bad news, right? Oh, by the way, you're going to see sailing metaphors throughout this whole thing. Hopefully it doesn't make you seasick. I'm really into sailing and haven't been able to go for a while. So I had sailing on the brain. So anyway, let's get the bad news out first. What's going on if you want to raise money right now? Well, VCs are spending most of their time working with their portfolio companies, making sure they have enough runway to stay afloat. Our VC has been having like weekly sessions. They set up a Slack channel. Like they're really focused on making sure everyone, can stay alive. There's a great tweet storm by Elizabeth Yin of the Hustle Fund right now. And she goes through like the day in the life of a VC during COVID-19. And it's pretty interesting because she's being distracted, as many of us are, with trying to homeschool her kids and still look at deals. So that's one thing to be considered. A lot of people are predicting a mild to severe economic downturn or recession, different forecasts of how long it could last, anywhere from a few months to, 2 years. So there is that probability that we have to contend with. Kind of related to the first bullet point, investors are just kind of slowing down. They're trying to adjust to the new work from home. They're trying to look for more data points in the private capital market to see what's going to happen, right? So everyone's in just sort of watch and wait mode. Angel investors just lost, if they had money in the stock market, as most of them do, just lost 25% of their portfolio value. So sometimes they're kind of reassessing doing new deals. This is a good and bad thing. Valuations are going to take a hit if you're raising money right now. I've seen a few small surveys on this, and one survey was by a Israeli venture fund. So, take it for what it's worth. Maybe it's specific to Israel startups, but their estimate was about a 25% haircut was the median valuation decrease, kind of for the near term. And if you are raising money, terms are going to get harder, and investors are going to put in more protective provisions, like we say in this box here: liquidation preferences, dividend rights, other protections, that you might have to live with if you want to raise money right now. However, there are lots of reasons, I think, also to be positive. Maybe first and foremost, investors are sitting on a record amount of capital, $189 billion of dry powder, as we say, which they need to put to work. They don't need to put it to work immediately, but the way venture funds work is they raise a fund and they have X number of years to deploy it into startups. So there's $189 billion of capital that must go into startups, or VCs have to give it back to their LPs, and they don't like to do that. This is 50% more capital than there was in dry powder during the last downturn in 2008, 2009. So, lots of money to be put to work. Kind of the good and bad of the stock market gyrations is that a lot of angel investors are actually looking at deals because investing as a startup is a much longer term play, right? They've seen they can't make money in the stock market. Interest rates are almost zero, so they can't make money in the debt market, right? So they're kind of looking at startups, especially those that now have a 25% valuation discount, as a great place to invest. Sovereign wealth funds and corporate VC have kind of come into the private capital markets in recent years. Sovereign wealth funds are like government-backed funds investing. Corporate VC means venture arms, put on by large corporations. Whether these both stick around through a recession is to TBD. Corporate VC in 2008 kind of retreated from investing in startups, so we'll see if they do that again. But the point is there are new sources of capital. And kind of interesting, VCs who invested throughout the last downturn, like lowercase capital, made huge outsized returns. They beat all their competitors who sort of hunkered down. And I think, a lot of VCs have memory of that, right? So we might see people, continuing to do deals because of that. Kind of interesting. We'll see how this plays out, but you have, several thousand investors all stuck at home with not much to do in many cases. So in some ways, if you're raising money now, you have a bit of a captive audience. I hear some founders setting up, 10 Zoom meetings a day with investors, which is kind of interesting, right? It's a lot more, you can pack in a lot more VC pitch meetings over Zoom in a day than you could if you were physically meeting them all for coffee. I don't want to give anyone false hope. A lot of people are thinking this recession could go on for a while, but there are other scenarios. There are a few scenarios like all this stay-at-home actually flattens the curve, or a vaccine could be developed. I mean, there are a couple different vaccines in clinical trials already. There are scenarios that the downturn ends fairly quickly and we bounce back. Don't want to oversell that, but it is possible. And kind of interesting, in the 2008-2009 recession, seed deals actually continued to increase throughout. Let's see, is that a question? I don't know if I can access that without jumping out. Mara, do you want to?
I can read it off for you.
Yeah, maybe read off if there's anything. Yeah, please.
What are the returns from 2008? Are there numbers we can quote to VCs regarding the potential to make money?
That's a good question. I don't know that. I think it is a little bit of a investor specific thing, like some of the ones that, kind of famously did invest had just huge home runs because I think there's one example, like, I don't know if it was lowercase capital or another fund, that they got into Uber at like a $4 million valuation, right? So just because valuations are compressed, like their returns are much greater. I'll ask contact if we can find that. I don't know if you're going to get a macro view of that though. It would be interesting to tell. It would be interesting to tell investors though you're pitching. Anyway, so, seed deals actually continued to rise throughout the last downturn. Series A and Series B declined, but that's encouraging. And then, you have to take everything out of China with a bit of a grain of salt, but apparently VCs are already actively investing in Chinese VCs are already back in the market actively investing, which is a pretty quick bounce back there. So take that, for what it's worth. So what do great. You tell me the good and the bad. What does that mean for you? I think kind of taking a stoic approach here. You can't change this macro environment, but you can change things that are under your control. First and foremost, this is kind of the message from all the investors, all the VCs right now. We're going through a storm. Like Shailene here in the movie Adrift, she just got walloped by a storm. First things first, she's got to get all her lines out of the water and get her boat put back together so she can survive. Cutting costs, trimming fat, lots of stuff out there about this right now. So I'm not going to go into too much detail, but a lot of VCs are saying, try and plan to have 18 months of runway, right? So that's something. And, what are people cutting? They're cutting discretionary marketing budgets, travel, of course, and often putting hiring on freeze. Some people are taking across the board salary haircuts too. Number two, what do? Work with customers on pricing and increase your value prop. Just as an example, with Founder Suite, we're sustainable. We sell startups, raise capital. I have customers coming to us saying, hey, my revenue's gone to nothing. What can you do for me? We're giving them discount codes. We have a COVID support package of 6 months, a pretty deep discount code we're applying to our customers. I'm also pushing annual deals at a really deep discount because then, I've got that revenue locked in. Also, we're just trying to increase our own value prop by like giving more for the same monthly subscription fee. Like we're launching this VC Ask Me Anything small groups for our paid customers. They can come and kind of mingle and meet with VCs. So, work directly with your customers, try and ease their pain. You might have to share some of that pain by cutting your revenue or whatever, or sharing the pain with them. Use this time to focus on those like hunker down on product, right? A lot of amazing products have come out of Downturns in the past. There's this great quote about Isaac Newton, where during the Black Plague, he was isolated in his country house, and it was the most productive he had ever been during, that period. I might have the details slightly wrong there, but hunker down, get out some products. Explore relief efforts. So I think starting, maybe it was Friday or today, there's this payroll protection plan, which is part of CARES Act. And the gist of it is you may be able to get a loan up to 2.5 times your average monthly salary. And if you continue to spend that on salary, it will turn into a forgiven grant. So it's kind of like free money. I don't want to give you bad legal advice here, but you have to be eligible for it. But this is a pretty amazing thing to explore. You have to go through your lender to apply for it. And so there's tons of stuff out there. I can send you some resources that goes into more detail, but explore relief efforts. I've also got a couple spreadsheets of COVID support stuff I can send you. It's actually in the appendix of this slide. So get your ship shape. And then, think about raising money or staying active in the fundraising game here. Let's go through a couple things you can do. Obviously, just increasing the size of your funnel. We're going to talk about that a little bit more in a minute, but it takes a lot of time to build a target investor list and building your funnel. On average, I see people spending about 20 to 30 minutes per investor lead of research, kind of researching investors, qualifying them into their funnel. So if you're aiming for a funnel of 100 to 200, block off the time now to really build that out. Simple stuff, hone your pitch deck. Almost every deck I see could be improved greatly with additional practice and feedback. You guys do a great job at 500 already doing this, but just keep tweaking your story. Use this time to perhaps add another couple people to your advisor team, right? Identify a couple people, and this also takes time and research. Identify a couple people, maybe industry experts or vertical experts that you would love to have on your dream advisory board team. Reach out to them, get connected, and grow your advisors. And also just grow your founder network. This is maybe the biggest thing I would focus on right now during this potential recession, is to initiate and nurture investor relationships. We're going to go into a little bit more detail about that in just a second. And maybe, more than anything else, it's a mental thing, like stay in the race, stay in the game. This image on the right here is of a sailing team racing, and it's choppy and crazy, but they're focused, they're disciplined, and, they're going to come out ahead as their competitors are hitting reefs or capsizing or whatever. So let's get tactical on those two things a little bit, go in a little deeper dive. We have Nicole Kidman taking control of the boat after also going through some crazy stuff. Two things you can focus on now are expanding your investor funnel and initiating and nurturing investor relationships so that when the market does turn back around and kind of thaw, you'll be really ready to capitalize on it. So this is kind of advice I'm giving a lot of our customers, right? If you were planning to do a seed round or whatever, and you had a target list of investors of 100, double that, possibly even triple it. Fundraising has always been a numbers game. Historically, what I've seen is 5 to 6% hit rate, meaning the number of investors you pitch versus those who write a check have been around 5 to 6%. When we raised our seed round, I pitched 200 investors and raised from 1 VC and 10 angels. That's about a 5% conversion rate. That rate might actually drop a little bit in this new environment, so you've got to expand your funnel. You guys are going to know almost all this already, but I'll just go through it really quick. How do you expand your funnel? Look at AngelList. There's 35,000 investors on there. You can search by different criteria. I think it's interesting. You can search by what school they went to or previous companies they worked at. So you might find people you went to the same school with you. Great way to ice break there. Just a tiny product placement. We have a pretty big database in Founder Suite we're building out. We're just about to do a big update on it. We've got about 40,000 funds and 100,000 angels, and we've got them searchable by name, type. Type would be VC, accelerator, angel, family office, fund of funds, private equity. Industry, we've got them tagged like med tech, fintech, so on and so forth. And location is typically by city. Little quirk there. So search by your local city. And then, click these links. You can do a little more research on each one. You can get their contact information and add them to your target list by clicking that add to research button. It's available on the free plan. The whole database is available on the paid plans, but you can start to play with it on the free version. CrunchBase. Good place to also be researching potential investors. I like to make a list of 10 or 12 companies that are similar but not directly competitive to my business. I plug them in one by one into CrunchBase and I see who funded them at the relevant stage I'm at. And also if I have an investor already, I can plug that investor into CrunchBase and see who they co-invest with. So another good place for building your funnel. LinkedIn, also great. This takes some time, but it can be really, really effective. I'll go up in the search bar, type in something like angel investor, and then filter by second degree connections and by typically a location. And that will give me a few thousand results, people who have the title angel investor in their title that I have at least one mutual connection to. So theoretically, I should be able to get an introduction to any of them and that are in my area. And then I'll right click and open up a lot of these profiles one by one, skim their pages. A lot of times people will state very specifically what type of deals they're looking for, or they'll list their portfolio companies. And if they look like a good fit, I add them to my target list, I add them to my funnel, and I make a note of who the best connector is for that. It takes time, but you can really build out a pretty healthy funnel by doing this work. And then last but not least, lots of other places to be researching investors. These first four things here, Inside Venture, Venture Pulse, Strictly VC, are newsletters you can subscribe to for free. I read them every day, and when a startup raises capital, they announce it in here, and you can kind of see who's getting funded and who's funding them. Also, when a new venture fund raises a fund, when a new venture fund is formed or raises a new fund, they announce it so you can see who has fresh capital, dry powder to put to work. Conferences, obviously no conferences are happening right now, but you can go back and Google conferences in your industry and look at the agenda, look at who is speaking there. A lot of times investors will be on those panels. You can see who's interested in your space. Quora, TechCrunch, Medium, you guys already know everything about that. PitchBook and CB Insights are big databases, very good databases. They're expensive. They're about $15,000 on up, but if you can get access some way to them, really useful. And then I've already shown you how to kind of mine your own personal network using LinkedIn, and there's a way to do it with Founder Suite as well, but I won't go into that. Basically, again, if you've got 100 investors on your list right now and you want to get to 200, that's another 100 investors. Say it's 30 minutes per investor lead of research you're going to be doing. That's 50 hours. So kind of block that off to expand your funnel. So great, we just built this funnel. What do we do with it? Well, other key thing you can do right now to add significant value and improve your odds of raising money either now or eventually is to actually nurture investor relationships. Kind of thinking of this like a nurture marketing campaign, right? And the reason this is important is because most investors don't invest in you the first time you meet. They tend to want to get to know you over a period of time, to watch your company's progress, to see that you are making progress and executing on your business. And then they write the check, after a series of kind of touch points or data points. So really valuable to start making those data points now with investors. When do you do this? You do this 6 to 8 months before you want investors to write a check, ideally. Mark Suster is a VC with Upfront. I just love this, meet your investors early, tell them you're going to be raising later, and tell them you want to give them an early view, right? Every investor is competing for deals. They all want that early access. So you're kind of playing to that FOMO a little bit. So I'll send these slides. You can read this on your own. But basically, what do? You just built this funnel of, say, 200 investors. You reach out to everyone in your funnel on a one-to-one basis with a personal email saying, hey, I'm Nathan from Founder Suite. I've identified you as being right in our sweet spot. We're not raising money right now, but we will be in Q4 this year, probably October. We send out a monthly update. Very short, it's 1 page or less. May I add you to our distribution list, right? Make it sound like you're already sending this update, right? You do this regularly. May I add you to a distribution list to give you that early look? And a lot of times they'll say, sure, no problem, right? There's no real cost for them to be added to your distribution list. And, potentially they can get access to a great deal before others see it, right? So there's kind of a win-win here. And you can read this text. This is just, I wouldn't quote this exactly, maybe put it in your own words, but this is kind of that permission email. All right, so you got to actually send these updates now. Now that you've gotten permission to add them to your distribution list, you need to send it. Start off with a summary of what you do. Assume they know nothing about you, right? Which they probably don't. So always include a little company summary, very short, just 1 or 2 sentences top, reminding them, even if you're using the same one over and over, reminding them what you actually do. And then, right after that, I typically have recent wins or monthly highlights, basically talking about what the exciting, cool, sexy, fun stuff that we just got accomplished. Even in a down market, we are executing and, landing deals, landing partnerships, whatever it may be. Include a little KPI table, metrics table, just so they can kind of track your metrics, and what those should be are really going to be dependent on their stage, but whatever your North Star metrics are. Include a team photo in every single update, because again, this is a marketing campaign. This is nurturing leads, and you want to be connecting the dots between a big company vision, a team that's executing, and the people that are behind that team. And so, put in a different team photo, or at least founders, every single update. And then I like to conclude these updates by telling what I'm going to be doing next month or next quarter, right? So I'm kind of teasing what I'm going to do. And then you create this virtuous cycle, because in the next update they get next month, I've kind of concluded, like last month, I told you we were going to land Oracle as a customer. This month we're in final negotiations with them. You're creating that virtuous cycle that you can plan and execute, even in a down market. Other stuff to include, optionally, product news. If you just launched a new product, key hires, you landed someone. Maybe you took my advice from a few slides ago and you built out a couple new advisors. You can mention that in this update. That's great referenceability and credibility. Any new partners you've added, pilots, positive press, PR, etc. Make this short though. This really, investors don't like to read. They have ADD, so don't go too detailed here. Make it short, skimmable. Assume they're going to be skimming it, not deep diving into it. and make sure you send it every single month to that whole entire funnel, that whole distribution list. Okay, another product plug. We do have a product for investor updates, and we have a way to track who opens it, which I think is nice. It's nice to be able to see who's actually paying attention. Because really this is marketing 101. If you're sending this out to 200 investors, half of them actually open your update, 50 of them are reading it regularly every single month. These are probably the people who are going to write you a check either now or soon, or when you actually, announce your fundraising in the future. So again, drip campaign, marketing 101 as applied to raising money. Shifting gears slightly here, if you do have investors, you should also be sending this update out to them. It might be a slightly different version that also includes things like challenges and asks for help. I create 2 versions of every update, one for prospective investors and one for my actual investors that have given me money. But that's really important too, because you're going to be asking your existing investors either to write another check in the future, or you're going to be asking them for introductions to investors. So you want to be sending them an update as well. As Jason says here, if your startup isn't sending you any monthly updates, it's going out of business. And one more from Jason. This is a more recent quote, which I think is just kind of fun. Fortunes are made in the down market. In other words, what you're building and doing now and collected in the up market. So let's get to work. You've probably heard some of this before, but like a number of unicorn, decacorn, massive success companies were all started in the last recession, right? So hopefully that gives you a little hope. Companies that are created in hard markets thrive in more bullish markets. So insert your logo here. And then, kind of continuing or concluding our metaphor, when the wave is coming, be like the rock and take action. So hopefully this works. Let's see if I can do this. Be like the rock. Ray?
That's it. All right, hold on. We got to get over it before it crests.
This movie gives me the chills. That's one of your competitors right there. All right. Well, for some reason that clip ends there, but spoiler alert, he makes it over and survives. So that's basically this talk. Let's see, I have a couple just additional things here. Email me. I'll send Mara these slides. Hopefully she can distribute it. But you're also welcome to email me. I've got a couple examples of what these updates should look like. So feel free to click on those to kind of, give you some ideas of what to write. Lots of good COVID resources here. These are huge lists, really good stuff. So check it out. If you're in Europe, we've got this great list of investors still open for business. Some discounts for you guys if you want to play with Founder Suite. Also got a good podcast called How I Raised It. And if you want to just kind of read about like what VCs are saying about how active there are, we've got a couple links for that, and also just some good data that was sort of behind this. So that is basically it. Oh, I want to just end on this encouraging note. There are investors out there like Tom Holm, like we just did a deal over video conferencing. Unshackled Ventures is going to kind of lean in and do, a lot of 20 to 30 more seed round investments in the next 12 to 18 months. So there are some encouraging signs here. All right, that is the conclusion of my talk.
Thank you so much, Nathan. Very informative. We got some gratitude of thanks in the chat. And we'll get you on Slack so you can interact with the founders. I have a feeling maybe some people might need to make tweaks to their investor update emails that they aren't necessarily aware of, because investors definitely aren't giving feedback on that unless they've already written a check. So next steps, I can see, how to conduct a proper email, and then also potentially a Zoom meeting. You lose the face-to-face interaction, so we'll see how we can help our founders with little tips and tricks to make a Zoom meeting feel just in person. And I love that video clip.
It gives me chills when I watch it, right? Because it's like, San Francisco and Golden Gate Bridge, and kind of metaphorical in many ways, but it's fun. Yeah.
Absolutely. Well, thank you for your time, and we'll chat soon.
All right. Thank you very much. Bye.